Imagine waking up and realizing the cryptocurrency you thought was just another altcoin is quietly being powered, governed, and expanded by Google, IBM, LG, Dell, and now, according to internal whispers, even Amazon might be stepping in. And then the founder of Hedera himself steps forward and drops a warning that changes everything for HBAR holders. Not hype, not rumors, a structural shift that could redefine governance, supply, and the future price of HBAR. If you think you understand Hedera, prepare to be proven wrong. If you're interested in this topic, hit the like button, subscribe, and type "interested" in the comments, and I will give you a heart. Imagine waking up and realizing the cryptocurrency you thought was just another altcoin is quietly being powered, governed, and expanded by Google, IBM, LG, Dell, and now, according to internal whispers, even Amazon might be stepping in. And then the founder of Hedera himself steps forward and drops a warning that changes everything for HBAR holders. Not hype, not rumors. A structural shift that could redefine governance, supply, and the future price of HBAR. If you think you understand Hedera, prepare to be proven wrong. If you hold HBAR right now, you need to hear what Hedera's co-founder, Dr. Lehman Baird, just revealed, because it's the kind of update that separates casual spectators from the people who actually understand what they're holding. Forget the noise, forget the daily price swings. What's happening behind the scenes is so much bigger than a chart. It's structural, it's undeniable, and it's about to reshape who controls Hedera, who builds on Hedera, and who benefits the most from its next phase of growth. And to understand why his warning matters, you have to start with one thing. Hedera is not run like any other crypto on Earth. Most chains are governed by anonymous whales, political drama, or back-channel developer circles. Hedera is governed by something completely different: global Fortune 500 companies with reputations, regulations, and billions of dollars on the line. Google, IBM, LG, Boeing, Dell, Deutsche Telekom, T-Mobile, some of the strongest names on the planet, all publicly listed, all transparent, all accountable, running and guiding the network. No other chain has anything even close to this. And that's exactly why Lehman Baird insisted on this system. In his own words, "I don't trust strangers. I don't trust anonymous whales. I trust a transparent process more than any individual." And that's the first bombshell. Hardest governance is built to resist bribery, manipulation, and capture. But here's the second, and this is where things get interesting. All those companies you've gotten used to seeing on the council, many are about to leave. Not because something is wrong, but because term limits are expiring. Google joined in 2020, IBM in 2019, T-Mobile and LG joined early too. Each is allowed 2-3-year terms, then they must step down. And those deadlines, they're here right now. Over the next months, the council is going to undergo the biggest reshuffling in its history. Companies that have been here since the beginning will rotate out, and new, potentially bigger companies will rotate in. And that's where the third bombshell hits. Amazon has been rumored multiple times to be in discussions with Hedera's Web3 working groups. Are these rumors confirmed? No. But here's what is confirmed. Hedera wants 39 council members. Right now they have 31. Multiple seats are opening soon. Huge corporations must replace the outgoing ones. That means one thing: Hedera is about to enter a new era of governance with fresh billion-dollar players stepping in. And that's exactly what Lehman was hinting at: expansion, diversification, and global scaling of the network. The question for HBAR holders isn't will new companies join? The real question is, how big will those companies be? Apple? Nvidia? Meta? We're not talking about fantasy picks. We're talking about companies that match Hedera's mission: global infrastructure, regulated environments, enterprise-grade tech, and high-volume settlements. These aren't meme coin players. These are trillion-dollar titans who care about security, transparency, legal clarity, and real use cases. And Hedera is built exactly for them. But here's the part most people still aren't connecting. A new wave of council members means a new wave of enterprise-grade use cases, and every use case, every application, every settlement, every tokenized asset requires one thing: HBAR. Not optional, not a bonus, required. And that's why Lehman's warning matters. The network is expanding. Council turnover is happening. New companies are entering. Old companies are rotating out, and HBAR becomes the fuel for all of it. But before we go further, if you're serious about staying ahead of everyone else in this ecosystem, and you want deeper breakdowns, early alerts, and exclusive HBAR market insights, join our membership here on YouTube. Not only will it upgrade your understanding, it could genuinely help you navigate the moments others panic through. Now, let's continue, because the story gets much bigger from here. If you hold HBAR today, every single one of those consequences lands directly on your future gains, your financial outlook, and your long-term positioning. Here's the truth nobody wants to say out loud. Council turnover isn't just a political formality. It's a structural reset of power, influence, capital flow, and enterprise direction. New members don't join quietly. They join with budgets. They join with pilot programs. They join with internal roadmaps, compliance teams, engineering departments, and stakeholders ready to build on day one. When a Fortune 500 joins Hedera's council, they aren't coming to observe. They're coming to integrate. Every single member historically has built something, funded something, tested something, or deployed something on Hedera. And that's why this next rotation matters more than any price dip, correction, or support line. Think about this logically. If companies like Amazon, Microsoft, Nvidia, Walmart, or Meta join, they don't just take a seat, they take responsibility. They will add workloads, they will use the network, they will require infrastructure, they will deploy products that need HBAR at the protocol level. And here's where the tension tightens. Hedera's supply dynamics are not built for a sudden enterprise surge. Circulating supply, tilt 42 billion. Total supply, 50 billion. Supply remaining with Hedera Foundation and governance allocations shrinking faster every quarter. And ETFs, they're already swallowing hundreds of millions of HBAR like it's nothing. But let's stay on the governance story for a moment, because Lehman Baird wasn't giving a hype speech. He was giving a structural warning. His message was simple. We are expanding, we are evolving, and the companies who govern Hedera must rotate. But what he didn't say, yet what is obvious between the lines, is this. When these giants rotate, the ecosystem itself rotates with them. You don't replace Google with a smaller company. You don't replace IBM with a startup. You don't replace LG with a hobbyist project. You replace giants with giants. And these giants don't enter without intentions. Here's where it gets even more interesting. Term limits don't just force companies out. They also create timed pressure for incoming companies to make an impact fast. Most enterprises operate based on results, metrics, and quarterly objectives. If they join the council, it means they have real-world plans involving tokenization, AI integrity, supply chain automation, cross-border settlement, custody tools, or identity systems. And Hedera becomes the settlement layer for all of it. That's why Lehman emphasized transparency. That's why he emphasized reputation. That's why he emphasized deliberate governance structures. Because if Hedera wants global financial partners, central banks, real-world asset platforms, and major brands building on-chain, the governance has to be clean, predictable, public, and accountable. And Hedera's is exactly that. Now let's break down what most people completely overlook. This governance cycle is happening at the exact same time as the largest institutional onboarding wave in Hedera's history. Cross-chain integration from Axelar, 60+ chains now linkable to Hedera, energy, real estate, and supply chain assets being tokenized. New DEXs and DeFi protocols launching, enterprise usage increasing month over month, ETFs accumulating unprecedented amounts of HBAR. You don't get convergence like this by coincidence. This is systemic momentum. But the part most investors ignore is the timing. Because the timing isn't accidental, it's coordinated. Enterprises don't move spontaneously. They move after regulatory clarity improves. They move when infrastructure stabilizes. They move when institutional rails like ETFs go live. They move after internal testing is done, and now all those conditions are aligning at the same time the council is opening seats. In other words, big companies are not just coming, they're coming into an ecosystem finally prepared for them. Hedera's founder wasn't hyping anything. He was preparing you for a shift. Because once those new seats fill, the network's trajectory changes permanently. New companies bring new users bring volume. Volume increases demand. Demand meets a shrinking supply, and a shrinking supply meets ETFs, enterprises, tokenization protocols, and real-world financial products all pulling HBAR off the open market simultaneously. This isn't a theory, it's not speculation, it's mechanical, it's mathematical, it's inevitable. And we haven't even reached the final chain reaction yet, because part 3, that's where all the dominoes align into one outcome that could redefine HBAR's valuation entirely. This is the part nobody wants to talk about because this is where everything finally connects. The price, the governance turnover, the enterprise expansion, the ETF accumulation, the DeFi explosion, and the real-world tokenization wave. All of it leads to one unavoidable truth. HBAR is entering a phase where retail sentiment no longer dictates the direction of the asset. That era is ending quietly, permanently. Look at the pattern. Retail panic sells, ETFs accumulate. Retail complains about price stagnation, enterprises deploy new workloads, retail loses faith after dips, tokenization protocols announce expansions, retail focuses on weekly candles, Fortune 500 companies quietly build infrastructure that will live for decades. This is the HBAR paradox. The moments where retail feels the most frustration are always the moments where institutions move the fastest. And that's exactly what's happening again. So let's tie together the chain reaction that Lehman Baird hinted at without saying explicitly. Step 1, council turnover. Google, IBM, LG, and T-Mobile nearing term expiration means slots must open. These aren't optional vacancies, they're mandatory. Hedera's governance model requires fresh global companies entering the ecosystem after each cycle. That alone would spark speculation. But when rumors swirl about Amazon, Nvidia, Meta, or Microsoft entering the council, the stakes change. These aren't crypto partnerships, these are global systems integrators, enterprise backbone providers, AI infrastructure leaders, cloud monopolies. They don't join unless they intend to use the network. And they don't use a network without foundational token demand. Which brings us to step 2, tokenization and RWA momentum. Energy funds, real estate platforms, global supply chains, digital identity systems, these aren't test cases. They're production-ready deployments that require settlement, immutability, traceability, and compliance baked into the protocol. Those are Hedera's strengths. Every tokenized asset requires storage. Every transaction requires gas. Every DeFi upgrade requires liquidity. That liquidity requires HBAR. And these new projects aren't coming in with $500 0 cents. They're coming in with institutional level volume. The inflow doesn't show up instantly, but it builds silently in the background until it erupts. And now we get to the most explosive part, step 3, ETFs and institutional capital acceleration. Retail has never fully understood this point, but here's the blunt truth. ETFs don't buy in emotions. They buy in schedules. They buy in cycles. They buy in cold structured blocks, and they hold for years, not weeks. The single Canary Capital ETF already bought over 421 million HBAR in its first month. Now imagine multiple ETFs operating together. Imagine inflow scaling. Imagine institutions allocating even 0.1% exposure during rebalancing. And this is where everything finally snaps into place. Step 4, supply squeeze plus enterprise surge plus ETF hoarding equals one of the greatest upside asymmetries in the entire crypto market. Hedera's circulating supply is already high, foundation releases slow down every year, enterprise usage increases every quarter, tokenization demand removes tokens from open float, ETFs remove tokens permanently, retail supply shrinking fast. And here's the real twist. Price action right now means nothing compared to what happens when the next wave of enterprise and ETF demand collides with a supply that cannot expand. Scarcity isn't a narrative. It's coded in. It's guaranteed. And for the first time, Hedera is entering an era where supply dynamics, governance evolution, and enterprise pipelines are all moving in sync. That has never happened before. And that's why Lehman Baird sounded so calm. Founders aren't calm when things are uncertain. They're calm when the next phase is already guaranteed. The rotation he's describing, it's the final phase before Hedera stops being crypto and starts becoming infrastructure. Enterprise-grade infrastructure for global systems. And if you hold HBAR right now, you're positioned in an asset that's about to transition from ignored to inevitable. But here's the question that matters most. When this rotation happens, when those new companies enter, when tokenization scales, when ETFs accelerate, and when supply compresses, are you going to be the investor who stayed focused or the investor who panicked out at the bottom because the candles looked ugly? Hedera has had 5 years of building, patience, frustration, sideways motion, and quiet development. Now for the first time, everything is converging. The council is changing. The institutions are circling. The ETFs are loading. The tokenization protocols are deploying. The DeFi railways are live, the supply is tightening, and one day, faster than the market expects, HBAR will price all of this in. The question is simple. Will you still be holding when it does? Drop your HBAR prediction below and let's see who actually understands what's coming.